This is the Daily Market Rundown live from the Tradelo trading floor. It's August the 11th. Some highlights from today's show. China-US tariff truce nears its deadline. Putin and Trump are holding a key meeting on Friday, and the dollar awaits key CPI data. A good day, traders, and welcome to another action-packed week of trading. I think the best place to start is right there with that statement, which is action-packed. There's a number of headline risks out this week that we have to be aware of, whether it's the China-US tariff situation with the deadlines looming and ending tomorrow. We're going to find out what happens next in that whole narrative. We, of course, also then have the Ukraine-Russia talks that will be ongoing throughout the week, and then of course Putin and Trump meeting on Friday, and then we also have key US CPI data out tomorrow, which really is going to set the tone not just for this week, but perhaps of course for the next 3 months, particularly when it comes to the interest rate pricing in the US. Now, there's a number of things to discuss, and we are going to discuss all of this of course over the course of the week as it unfolds, but let's get stuck straight into it. Let's talk a little bit about topic number one, which has got to do with something interesting, because it does really reveal just a lot more about the US administration's approach. Now, effectively what's happened is the White House has come out and said, you know, China, if you want to buy these H20 chips from NVIDIA, we're effectively going to add on 15%. And so effectively NVIDIA and AMD will pay or will be able to sell their chips to China, and they will then need to deposit and transfer 15% of the sales price over to the United States government. Now, if you look at this at face value, I did read a few comments where they're talking about, well, it's a way that Treasury can raise revenue. The reality is that in terms of the actual numbers, I mean, we're talking about 23 odd billion of total sales to China. So when we look at the face value number, call it 3 billion, 3.5 billion, it's not really a situation that's going to raise any significant money for the Treasury. Okay, so that's not the reason they're doing it. So we need to look a little bit deeper. We of course need to go and assess a little bit more as to why has this been done? What's the angle of attack here? What are they trying to do? And I think it's quite obvious when you read between the lines. And again, to understand this, go back to the DeepSeek moment. Okay, when DeepSeek came out with a wonderful model, the fear on Wall Street was this idea that, hey, these guys can produce an AI at a fraction of the cost of US AI companies. Therefore, everyone is going to demand DeepSeek's model and no one is going to demand US models. Okay, now factor in that none of these AI models are actually producing any, they're not producing revenue. None of them are covering their costs given the significant capex rollout. And so the general line of thinking here is that if the US sells chip to China at 15% higher prices than US companies can buy them at, the reality is that ultimately they will be producing AI at a much more expensive run rate. Okay, and so again, what does this point to? Well, it points to a situation where you're kind of not slowing or stopping China from developing AI, but you're making it a hell of a lot more expensive for them to make AI. Okay, don't forget, these AI models run off thousands and thousands of chips, and it's not just the initial chips, they have to be replaced as well. Okay, so that's the play here. It's effectively making Chinese AI, giving them a little bit of disadvantage because they are effectively running the same chips, just 15% more expensive. Okay, that's the play. There's nothing else ready to read between that. But it does mean, of course, that we are going to see a little bit of vol in NVIDIA's stock price. It's not necessarily a game changer. It will be interesting to see how NVIDIA ultimately handles this. Do they pass on the full 15% to China? What will be the case? Okay, we just don't know that yet. But the general thinking is that this will have a little bit of an impact on NVIDIA's revenue. Hence, we are seeing NVIDIA open down a little bit in the overnight session now. Like I said, that's got a lot less to do with the fundamentals and a lot more to do with where the chart's at. I mean, we can see NVIDIA has had some rally over the course of the last couple of months. We've been trading, we were trading down at 90 bucks. We're trading double that. We've had a 100% rally in the space of 3-4 months. To see a 5, 10, 15% correction is not exactly problematic for this stock. Okay, that's all it is. We can see also last week, of course, we did trade our way, grind our way slowly back up to those record highs. But the market seemingly, if we go and look back since July, okay, the market has very much run into a loss of momentum. That's all it is, okay? The market was very aggressively bidding in May, June, and then as soon as we entered sort of late July, August, we could see that the market's just lost momentum. Okay, and that just points typically to somewhat of a consolidation period. Where's the support? Where's the resistance? Well, that 165 looks pretty interesting. So if we were to get down there at some point over the course of this week, next week, fine. But highly likely we are going to just settle into a range between 165, 182 until further catalysts. Okay, nothing more to read into that news other than just a little bit more tactical from the US government, just trying to hamper the AI development in China. Now, of course, it's a very important week, not just from a news flow, but from a sort of a war impact going on in Ukraine and Russia. It looks as though we are nearing the end of this war. And again, I say that hopefully. We, of course, had a very similar situation early in this year when we had the minerals deals going around. But it does seem like now there is something quite interesting at play. Otherwise, we wouldn't have President Trump meeting with President Putin on Friday, so just do mark that in the calendars. I think the key takeaway is, of course, there's been a lot of headline news flow, and I think you have to be cautious how you read into it. The reality is these two leaders would not be meeting face to face if there wasn't something of substance. Okay? And I think that's how you have to approach this. There is definitely something of substance. Markets are pricing that perhaps this could finally be the week where there is some form of an initial truce, an initial guns down, initial, let's now actually discuss things at a much higher level. And that's positive. Okay? It doesn't matter how you want to spin it. It's positive in general for what's going on in that situation. So I think the key takeaways from this is there is now some expectation priced in that they are going to reach some form of a deal. And so as traders, where's the play? Well, it's not necessarily on them forming a deal. I think that is largely priced. I think where ultimately there could be some opportunity scope is perhaps early on the week. And what do I mean? Well, look, we know that initially President Trump was talking about some significant tariffs on countries that import oil from the likes of Russia. And we know, of course, sanctions in the past were imposed, but they weren't necessarily that impactful. Okay, and so I think the key general thinking is that we may actually have a scenario earlier this week or early on this week where the President Trump comes out and actually says, hey, China, we're going to impose some significant tariffs on you if you don't reduce demand for Russian oil as a negotiating tactic as they go into Atlanta on Friday. Okay, so there could be some work to do in the oil, I suspect, early on this week where we do perhaps see a little bit of headline risk, perhaps putting some tariffs in line on China for ultimately buying Russian oil. And again, that'll be used more as a headline tactic. So much more of a smash and grab, not something that's going to necessarily change the trend in oil, but that could be a limited scope opportunity in oil. But the general thinking is we're going into Friday. Yes, Europe wants to play a role in this. Yes, Europe has their ideas as to how this negotiation should happen. But the reality is that we've got the US there, we've got Russia there. They seemingly have found consensus. And again, we don't fully understand the story because we get fed little tidbits, but they have found some consensus. And I suspect this week now is going to be about just getting all parties on board so they can put together a script, tell us that, yes, everything is fine. Ukraine will give away some land, Russia will give back some land, and we'll get some deal over the course of the next couple of months. Okay, all positive from a market impact perspective. Well, again, I think there's a couple of ways to look at this. It's not bad for markets, but it's not necessarily going to change, risk assets. I mean, in general, this has, been coming for some time now. In terms of oil, well, it does bring Russian oil back onto the general market. And again, I say general market, it never went away. It's just now it's legally back on the market. So if anything, it doesn't reduce supply, it increases the available supply onto the market. Okay. Some markets to pay attention to. Well, again, I think there are a couple of proxy markets. We know the Polish zloty has been one. If we look, of course, over the course of late last year when President Trump won the elections, we can see there was quite a directional trend move of 5.5% in the Polish zloty. Now, that might not mean a lot to you because many of you probably don't trade Polish zloty, but to see a 5.5% rally in the zloty against the euro, of course, which is its major trading partner, is very, very unusual. Okay, that really was one of the key players. Now, again, as you can see, the reason I'm referencing this is we are or have been for some time stuck right above this 422. So if you've got access to this market and you're a spot Forex trader, that could be one to definitely look towards to the downside. as we near into Friday. But aside from that, like I said, it's very much an oil play. If anything, we can see, of course, oil has already started to price that in. We can see oil has come off quite significantly, almost 10% over the course of the last week and a half. But the general thinking is that, look, it's not going to reduce, it's not going to do anything other than add a little bit more supply at a time when, for example, Chinese PPI missed today, so China's not exactly re-accelerating. And of course, we are seeing a global growth slowdown. Okay, so it all plays into the same discussion we had last week, which is we are seeing a slowdown in demand for oil as well at a time when we are, of course, seeing an increase in supply of available oil. Okay, that does mean that OPEC will have a little bit of a difficult time communicating what it plans to do next. But don't forget, OPEC has still got excess barrels that it can also bring back to the market. So point being, none of this points to higher oil prices. With that in mind, I think technically we can see where we closed last week. We've now closed below that $64 a barrel. Doesn't mean we're just going to open and drop, but I suspect it does mean we're going to sustain this one-time framing. Okay, you can see here for now 7 sessions in a row we have not been able to close above a previous high. I suspect the fact that we are below $64 a barrel, you can now initiate shorts at $64 a barrel and look to only exit that trade should we close above $65 a barrel. Okay, where's the path of least resistance? Well, it's very much a grind lower. I suspect $60 does get tested at some point this week, but like I said, there's every possibility of headline risk this week. And so for me as a trader, what I'm actually looking to do is any kind of an aggressive bid up, perhaps a little bit of a tariff scenario on where they try and enforce tariffs on China to reduce demand. I'd very much be looking to sell into that and hold on to those shorts for that move down to 60. Okay, so that's how I'm going to play it this week, just looking to be tactical, looking to sell into any kind of volatile bid up because like I said, fundamentally oil to the downside. Okay, and then in terms of the key other news, it's very much CPI this week, and I think that's the key focus for the markets. We all just want to understand what's going to happen from a CPI perspective. We said this last month. We should have already started seeing the impact of tariffs last month. We didn't see it. Okay, we've seen, if anything, a number of misses now on the CPI front. And so I think the general consensus going into tomorrow's CPI report is quite simple. If that number comes in line, Fed is cutting in September. Okay, so long as the number doesn't beat tomorrow, the Fed is cutting in September. Should it miss, the Fed is going to cut a lot quicker in September. Okay, and that really is the key for tomorrow. Is if we do miss on the CPI numbers tomorrow, it's very much going to open the door to 50 basis point cuts, and very likely the market's going to want Powell to open up and suggest that at his Jackson Hole meeting. Okay, we'll talk a little bit about more of that tomorrow, but that is the key takeaway from CPI. It is a massive headline risk, but also the fact that the US and China are now running out of time on the 90-day extension. Okay, so just to cast your minds back, the two went and locked horns. The US put 250 odd percent tariffs on China. China put 125% tariffs on the US. They both realized that it's impossible to do trade like that, so they agreed a 90-day truce after sitting down effectively. And the result was we've now reached the end of that 90-day truce. We know that currently China is sitting with 10% baseline tariffs plus another 20% fentanyl tariffs plus 25% from the previous Trump administration. So they're currently sitting with a 55% tariff, and that is effective immediately. What's now supposed to happen is we're now supposed to either get extension, which is ultimately the consensus, it is the base case, which is an extension, or what we're going to get is we're going to get a little bit of escalation, perhaps to de-escalate. It's the same sort of taco trade, which is President Trump comes out, he's not quite happy with the pace of things, not quite happy with the speed of things, so lay some threats down, but ultimately it's to get things moving forward, to get some form of agreement. Now, one thing I will point out, don't forget, seemingly everyone's getting relatively good deals. Okay, if we look at, of course, EU, there's the base case, they ended up landing with 15%, which it worked well for the US. They score in terms of the percentage, but of course it also was a lot lower than what initially was given on Liberation Day for Europe. Okay, so seemingly it seems like the possibility is that the worst case scenario is that of course there is a bit of an escalation to get some sort of concession, but we may also find a little positive spin where President Trump comes out and said, look, he can see that China's making an effort on the fentanyl situation, therefore he's going to cut the fentanyl tariff in half because he still wants to see more progress, and that's a way that they can effectively lower the China tariff without removing the entire thing. Okay, so I think you have to be nimble here. Like I said, base case is for an extension, but do not rule out any form of escalation. Okay, it's very, very possible. And like I said, you should all know by now, President Trump is very, very volatile. He changes his mind from day to day, so you've got to be switched on for the opportunity scope. Okay. Now with that in mind, I think going into tomorrow, the implied vol is going to matter a lot. Okay. Yes. CPI is tomorrow, and yes, typically it could be a big event, but more than likely it's probably going to be a non-event, and that's what the implied vol is telling us. It's telling us it's going to be a non-event. Okay, we can see a little bit of an uptick in the implied vol for tomorrow, which makes absolute sense given we've got the CPI, as well as we've of course got the end of the 90-day deadline coming due, and so the markets are pricing in some degree of sort of risk, but not anything significant. Okay, and I think that matters because what it does open the door to is a scenario where we could get a little bit of a shock. Okay, make no mistake, if we do see a bit of an escalation between China and the US, that could very much open up the VIX a little bit and the market just shifting the implied vol a little bit higher. Okay, right now this is very low given the amount of risks that are sort of apparent this week, and so we could get a repricing of risk this week. But like I said, the market's not expecting that. So this is very much we could get it, but equally we could get absolutely nothing, and this ends up being a damn squib week. What makes it a damn squib week? Well, look, 90-day extension or another extension for China-US tariffs, well, that risk event disappears. CPI in line, that risk event disappears. Okay, if those two disappear in terms of Friday, I'm not too sure that that's a significant risk event for the market, but if those two risk events early in the week disappear, again, it's back to summer trading, and then of course we focus our attention, of course, onto the Jackson Hole. And then finally, I think the key market to focus on this week is very much that of the Dixie. We have been in a very, very strong downtrend all year. What we can see is the last two bid ups have been very aggressively sold, and we now are effectively funneling our way lower. Okay, I think this very much speaks volumes about this market. It is a market that's being sold. Whenever there's kind of any aggressive bid up, it gets sold pretty quickly. And I think the key for this week, of course, comes down to CPI. Okay, should the CPI miss tomorrow, guess what? We are going back to those July lows, and I suspect lower. It does open the door to a more aggressive rate cut cycle for the Fed. Should the number come in line, yep, we're probably still going to make our way back down to 96, perhaps just a little bit slower. And then, of course, if we beat, well, that opens the door to a whole different discussion, which we will, of course, cover tomorrow. Okay, with that in mind, I think it's good just to wrap up and talk a little bit about today. I think the key sort of opportunity scope today is going to be just keeping an eye on the headlines. Maybe President Trump gives us a little bit of a tidbit about what to expect with regards to the China situation. So keep an eye on that. I do suspect there'll be something there. Apart from that, of course, it's going to be very quiet as we move into that CPI data tomorrow afternoon. But of course, we will cover that in the daily market rundown tomorrow. Any questions, do post them in the Discord channel. Don't forget to like, subscribe, and comment on the channel. Otherwise, good luck out there. Manage at risk. Go make some money.